let me pick on another controversial revelation from the Omega files then, Karthik, and let's talk about whether the pedigree of the founders matter or makes a difference. What does the data reveal on that front?
It's funny, right? So it's not like I'm trying to build a slide to sell a narrative. We asked for my colleagues and my young colleague Aditya and his interns to say, tell me what the data said, because I've never given it a thought company by company and looked at every piece of data. And this is what the data showed. And then they said, hey, we're putting out all of this is super controversial. I said, there's nothing to mask. The whole point of the Omega files is to declassify everything. And so there's no hiding. So let's put it out there. And then the interesting nuance, as you saw there, was, for what it's worth, Blume didn't have much of a bias in picking IIT and IIM grads and post-grads. And, probably in our picks, only 30% or 35% of founders came from there. But the returns were disproportionately from those founders, right? So there are two explanations. One is they actually were sold better, executed better, got to Series A, B, C as rightfully so, and then took off and delivered most of the outcomes for Blume. Again, this is one data point. It might be very different in another fund, so let's not overread into it. The other could be a very interesting bias that at that juncture, the ecosystem was much smaller. The Series A and B players were a more finite universe, and they had more IIT-IIM biases than Blume did. And so they ended up picking all of the IIT-IIM ones better than the non-branded sort of undergrad and postgrad degrees. And it's a chicken and egg, because if you don't give an entrepreneur money and you expect them to hit it out of the park, it's tough, right? And so what came first? The fact that they didn't get money or they were not good enough to raise the money is difficult to say today. So we'll wait and see. I think what's interesting is I'm prompting others to say, share your data. Let's see what the aggregate data says, right? Not just a dipstick analysis by one media outlet or the other. Let's show actual data, vintage by vintage, and we'll get better. By 2030, we'll have all the answers.
But let's talk about the other aspect, and that has to do with the consumer story and the returns or the lack thereof, and whether that indicates a larger overconfidence in the Indian consumer story and how it's played out so far, and what are the lessons to be learned from that?
I feel a little guilty as well in terms of saying we underfunded a lot of stories that could not have broken out as consumer stories. There were at least 3 e-commerce or 4 e-commerce companies in our portfolio, which died because as they grew, they couldn't meet their working capital needs and nobody would fund them, right? Because it was inventory-based models back then for a lot of the categories that we were chasing. And if a competitor got a better VC, a Series A VC with $3-4 million, you were dead in the water. On the flip side, the B2B companies, while they were out of fashion back then, especially if you have a software or deep tech, kind of knew those odds before they started, right? So they built very, very, very carefully. And despite a long drought or a very long undeclared winter back then, they thought this was the way business was. And they sort of broke even in large numbers, right? We have a disproportionate set of B2B, cross-border, deep tech winners in that first fund. And I will also admit, it's Omega Files 2027, I'm not out. But I'm saying when I do publish them, you will actually see in Fund 2 this reversed. Actually, more consumer startups took off in Fund 2, right? And the B2B ones struggled and fell behind because these macroeconomic trends of UPI and Geo, et cetera, massively benefited EdTech, commerce, like Spinny, used car service, flights. They're all Fund 2. And that vintage of 15 to 18 is a rockstar vintage for us on consumer, even though we were not cutting very large checks, just $500,000 to $1 million, because the market was willing to back a lot more of those companies. So I think, when we get asked a lot when we go overseas, how do you guys think about portfolio construction? And one lesson I would want to leave behind for your viewers and young VCs is it's very important, therefore, to sort of time diversify and sector diversify in a single fund itself.
Let's talk about what's happening on the regulatory front? Because you have, of course, written about this in your blog, that while there has been an appreciation, a recognition of this asset class, when we talk about the policy framework or the regulatory framework, there is still not a level playing field. In fact, you believe that it's almost getting in the way of allowing this sector to flourish.
Yeah, I think, so firstly, I think there's a broad brushstroke of dealing with all alternative assets with one paintbrush, right? So we're all under AIF, VC, private equity, hedge funds, real estate. We're all under the AIF industry. And as you know, I also represent the industry association. So I think one is, so therefore it's very difficult to dissect or divorce yourself from the aggregate asset class. And venture, I think, does a lot of technology, innovation, building blocks kind of investments more than any other asset class. However, for all that risk that you take, our perpetual complaint has been that somehow we seem to be taxed more than public markets, which actually has no primary capital formation at all, almost nothing, right? It comes, rides a stock, takes its money out, and they get taxed at half the rate as we do, which I just feel is blasphemous, right? For a country that's trying to break out and become like a $10 trillion economy, they're simply saying, yeah, I'll window dress all of the, the innovation stuff through venture capital, but I really don't think you need to get any benefits or not even a level playing field, right? That's one. And second is, whenever as a regulator, whichever regulator it is, if you're thinking about how you treat an AIF, who's my competition? Yes, there are other AIFs, but we're all fledglings. But we're competing with behemoths from cross-border, and they're considered FDI, right? And I simply want to know, am I being given the same terms as them? So you can't tell me to become Atmanirbhar and go and convince my hardworking HNI LPs who have made money with so much difficulty in the Indian context to part with that money and compete with some pension fund money which comes in billions of dollars through other GPs from overseas and has no such shackles or chains, right? And we won't get into a whole regulatory debate on this show, but basically, and by the way, my
that's for another day.
Is actually, I have actually not spoken about, it's not easy, but I want to illustrate what I mean by regulatory differential treatment. And I will hopefully try and show that in the data December 2024. So, to be able to say that if we had the same treatment as X or Y or Z, how much better could the AIF returns look like? And so I think at one level, while everybody wants to protect the investors and the entrepreneurs, I feel we're actually doing a little bit of a disservice to further give them more capital or more returns back. And I want to be able to show that with real data.
I've got 10 seconds left before I let you go. Public reaction, at least on social media, etc., to the Omega files, has been a lot of cheering on and patting you on the back, saying, well done. What's the private reaction been like? Have you been getting DMs saying, what is wrong with you? What are you thinking of?
Yeah, so I get that in a jestful manner. I haven't got any threat mails yet from my peers and colleagues. so I think I'm okay so far. I think the entrepreneurs enjoy this because they have never seen it. So the entrepreneurial ecosystem, the startup ecosystem is like, oh, this is what venture capital actually is in behind the scenes. And uncovering that and unveiling that and understanding it is useful. I think I'm doing the whole industry a service by telling entrepreneurs this is what we do for a living, right? And so don't take our money for granted. Don't use it frivolously. See how difficult it is to return the money. See how difficult it is. You're seeing power law. I'm actually demonstrating power law by the rupee, right? And so you should aspire to be on the right side of the power law, not on the wrong side of the power law. And so I feel like, we'll encourage more entrepreneurs to have that winning mindset.
There's plenty more to talk about, but we're out of time on this edition of Young Turks. But thanks very much once again for joining us here on the show and taking us through the rationale as well as the learnings from the Omega files, the first cut, the first edition. We look forward to many more from you. But for today, thanks very much for joining us.